Hello and welcome back to the Planning Perspectives podcast. I'm Jamie Hopkins, joined by my co-host, Kate Duffy. Kate, thanks for joining us.
Thanks, Jamie. It's good to be here.
And today we're very excited to welcome, Elizabeth Wagner, Senior Vice President and Director of Endowments, Foundations, and Charitable Giving here at Bryn Mawr Trust Advisors. Elizabeth leads the firm in advising philanthropic families, mission-aligned investing, tax-smart giving, and timely charitable strategies. Elizabeth, welcome to the show.
Thanks for having me.
So today we are diving into all aspects of the topic of charitable giving and planning. And as advisors, we focus on what our clients are giving and how to optimize that from a tax perspective. But giving is also very personal because often we are supporting the organizations or the causes that are very close to us. Because for individuals, families, and even business owners, charitable planning isn't just about the giving. It's about creating the impact, reducing the taxes, building a legacy, and aligning resources with our deepest values.
All right, Elizabeth. A lot of people, when they think about like charitable giving strategies, really think it's just something the ultra high net worth, wealthy people do out there. But can you talk to us about how that's not the case? And it's really for everyone, families, individuals, how they have to think about charitable giving?
So charitable giving is an interesting animal in that we always perceive it's the wealthiest people giving, but in fact, it tends to be the people with the most conviction giving, and they occur at all income levels. And so why does it matter to do the planning and what kinds of strategies are out there? Well, so planning's gotten trickier around charitable giving these days, and that's largely driven by the tax changes in the One Big Beautiful Bill. And so the too long didn't read version is it's more expensive to give today than it was 9 weeks ago, right? But why is that? Well, the changes in OB3 are really kind of interesting. The upside is that for gifts of cash, which is the asset that most people give, and we should talk a little more about that, but that's the asset most people give, it made permanent the limit of 60% of your AGI is deductible for cash gifts to public charities. And that's great. The historical average was 50%. That's a win for everybody who gives. But there's some other challenges. The biggest one is there's a new floor that donors who itemize have to cross before they can actually start to itemize their charitable deductions. What does that look like? It's 0.5 percentage point of their AGI has to be gifted to charities before they can start deducting charitable gifts. So if you have an AGI of, let's say, $500,000, the first $2,500 of your charitable gifts are not deductible. And given that people are not always charitable in proportion to their income, that's probably going to have an effect on the way Americans give. A couple other things, too. For those who are married filing joint, there's up to a $2,000 above the line deduction. That means you don't have to itemize to get it. Not married filing joint, it's $1,000. And there's a new tax credit. So this is interesting. This is not a deduction. This is a tax credit of up to $1,700 for gifts to K-12 scholarship granting organizations. And there wasn't a whole lot of definition when we looked at the bill before it was passed, but that definition has sort of emerged from the IRS over the last month. And it's really interesting. This is very broad tax credit, and it applies to gifts to any organization that is funding scholarships for kids who are eligible for the public schools, right? So just a really interesting set of changes. The big one, I think, for higher net worth and higher income earning givers is that there's an effective cap on the value of your tax deduction, right? No matter what tax bracket you're in, even if you're in the 37% tax bracket where you used to get 37 cents of every dollar back, there's a real cap at 35% now. So that's going to affect donors in that highest income tax bracket. So planning is more important than it ever was. Giving is more expensive, but good planning has always been about helping people make the gifts they want and make the impact they want to on the world. Nobody gives just for the tax benefit. The tax benefit is just how we make it make sense to ourselves that we're spending this money and it's a nice thing that we get back. So this is really about optimizing and planning, which is at the core of what advisors do.
Yeah, well, I love that. And I've been shocked to see how few people understood that anything around charitable giving changed. I think part of it was with the bill, everybody was looking back at all these retroactive things.
Yes.
And so we weren't really thinking about like, what do we need to do before next year? It was like, what do we already need to do for today? Which was a bit different than typically when we've seen Secure Act and Tax Cut and Job Act. They were mostly forward-looking bills. So we were preparing for the future. I think I told you this story, but I was talking to a firm I knew right at the last week of December in 2025. They had just come out of a meeting with their CPA that day, and they didn't tell them anything about any of the charitable changes because the corporation that they have does give. And there's a 1% AGI, adjusted gross income, floor now on company giving too, which if you think about $1 million company, that's $10,000 that they need to give before they get any benefit from it.
That's going to shift, I think, a lot of giving. It's interesting. I was in a room with a bunch of nonprofits yesterday, and one of the things we talked about was corporate giving and how is it going to change. And everybody in the room was a really seasoned fundraiser, and all of them are betting that most of the charitable dollars in corporations are going to flow over to a marketing budget instead of a charitable budget. And it's really going to change how they apply for support. And not for nothing, when you look at like the Giving USA data on where charitable money comes from, non-governmental charitable money, and where it goes, corporations are only 5% of that total anyway. And so the idea that some of that would roll back, I think, is going to be a pretty stressful notion for nonprofits, but for individual donors who are the core of that pie chart anyway, that there is change both for the individuals and the corporations. That is so destabilizing, I think, as a donor. And that's the big shockwave of OB3 from a charitable perspective, right? The giving landscape changed for everyone all at once, and no one was ready, just like the corporation you described.
So let's circle back to the individual donors, because we did talk about how we optimize from a tax perspective, but beyond the balance sheet, we talk about it being very personal. And you and I had a conversation a while ago that both struck me and stuck with me. And it was about, is generosity an inherited character trait or is it learned? And what we know is that often when we're young and people are modeling acts of generosity around us, it has a great impact, and it can shape how we give of our time, our attention, our resources, our expertise as we grow. So can we talk a little bit about that, and then how values fold into our giving?
Oh, this is my favorite topic, Kate, which I think you might know. So I think the big question here is, how do people learn to give? Is it learned? Is it innate? There are, a small subset of people who seem like they have this just innately giving thing going on. But Kate, most people do it exactly the way you've described. Most people learn. So I do this exercise sometimes when I'm in a big room, and I ask everybody who thinks of themselves as generous. They give their time, their talent, their treasure, their social ties to stand up. And so most of the room stands up. We think of ourselves as generous people. And then I ask, did you learn how to do that from someone? If so, raise your hand, right? So most of the hands in the room go up. You say, if that person was not mom or grandma, sit down. Most of the room is still standing with their hands in the air. So it's really interesting. Those formative influences are so powerful for us. And I think that sense of, how do we shape our values? Do values descend through families? That piece is really important too. I worked for years with a really generous family, and they struggled to express the ways that their family's values influenced their thinking. And grandpa was a birder. He actually had a big piece of land. Most of it turned into a piece of conservation land over the course of his lifetime. He would go out in the morning with his cup of coffee and his binoculars and his bird book around his neck in this little sack. And you would not see him till 1 or 2 o'clock in the afternoon. And they had a family foundation. And his grandson had this idea that he wanted to clean up the Ganges, right? So grandpa calls me and says, Jack is going to go clean up the Ganges. And he bursts into laughter. Does Jack know how big the Ganges is? Jack is like 24, right? And so we had this conversation, and we talked about the fact that, I talked about the fact, and I hoped he would pick up on this, that the conservation values that grandpa had were related to Jack's impulse to clean up the Ganges. Maybe grandpa was doing it on the land he could control, and Jack was trying to clean one of the major rivers of the world with his own 2 hands. But the value is the same. And so trying to find that shared value in a family, I think, is a really powerful route from which to start a tradition of giving. But a lot of times it's simpler than it was for Jack and his grandpa, right? A lot of times it's family members telling stories about where they came from almost everybody I talk to has a story about how their lives are different than their life was when they were small, right? That sense of growing up, growing, into both new responsibilities, but also new opportunities. The world is so much more global. It's exposed people to so many new ideas and so many ways to help. And it's interesting to me how that is shaping people's approach to giving back.
Elizabeth, if you don't mind, I just want to dive into this for a second because you emanate everything generosity with your colleagues, with the clients that we work with together. And so how did you get into this profession and what experience did you have early on that shaped your identity in the giving space?
That's a lovely, kind thing to say. And I will say the data suggests that role models are the key. You learn early. That funny experiment I do in groups turns out to be backed up by actual real hard science. And most people learn this before they're 10 and they learn it from someone close to them. And that was true for me. So I heard a story once from a donor who talked about her grandmother. And her grandmother grew up in like one of those little neighborhoods where all the houses were the same, right? These little brick 2-story houses, right? 2 rooms downstairs, 2 rooms upstairs, everything the same. And grandma's way of helping people was every time someone in the neighborhood got sick, she sent a casserole. And this woman who grew up to become a philanthropist was at 5, 6, 7 years old, carrying the casserole down the road, heavy casserole to the guy who broke his leg. And she did this repeatedly and she learned. Well, for me, that formative influence was my mother. She never found someone that she couldn't help. She found time. She was really busy, 4 kids, lawyer, blazing all kinds of trails, but always found time to be helpful. And clearly that stuck with me. So I thank you for the kind words, but I want to deflect that to her because that's where I learned it.
I love that. And then you gave your mom the actual credit for it. That's always good. I sometimes mess that part up and I just talk about myself. And then my mom's like, pretty sure I did that. I was like, yeah, it was you. But, I didn't always include her in the story the correct way. But I learned it from my mom, too. Sometimes I hear those stories like the woman that was taking the casseroles to people. And there's a part of me that wishes that I would do more things like that. I don't. In the exact same ways of like repeatable things, except for the cleaning up. I clean up trash on the sidewalks every time I see stuff out there. And my kids do that now too. And that's definitely one of those learned values they've seen of when I see, leftover coffee cans from, all the different types of cold brew coffee that exist in the world now. I throw them away. And part of it for me has just been, well, like that's our community. We want it to be clean and nice. But my mom actually took in, I think, 3 different homeless people over the course of it as kids. She actually flew somebody from Colorado to our house in Baltimore because they were living in a shipping container thing out there. And she was worried that they were going to freeze to death over the winter. But that stuff, I tell people that. And it's kind of like, well, that's a lot. And you're like, yeah, it is. Like, I don't know that I would do that. I'd maybe donate money or some other thing. But my mom didn't have enough money to just pay for the things. So she would do that. She helped them get like new teeth too, like the whole surgery stuff and everything. Wow. So it was a whole long ordeal, but it was super helpful. But when you think about influencing and some give back, it really does come from there. We've tried to put that in with our kids. So instead of doing like holiday presents for our cousins, we picked charities to donate to, and our kids, all 3 of them, picked the charities. So that's been a nice thing because they learn something about different ones, and you see where their own interests shine through on it, where the boys did like the World Wildlife Foundation Fund thing, and they're sponsoring a tiger or something like that. And then, my daughter did St. Jude's because she was like, oh, it's like little kids like me who are sick. So she wants to help them. And I thought that was really cool. But let's also go to now, Elizabeth, some of the strategies. So this is the area that I love is obviously, how do we give effectively? Because part of it is you are trying to maximize the impact you have. So different strategies allow you to give more dollars to more charities and have a bigger impact out in the world because of it.
So let me just say, Jamie, you just highlighted a best practice that's so good. I can't let it go by without shining a little light on it. So when you have young kids, right? All of the neurologists would tell us their brain development, they're still early. There are things that are too big for them to comprehend. And so a lot of families say, well, I take my 6-year-old to the soup kitchen. Your 6-year-old at the soup kitchen is going to see poverty, is going to see homelessness, is going to see addiction, is going to see things that are so big and scary that she will be overwhelmed. And so when you have littles, the best option are environmental charities or maybe animal related charities. And you're doing them both. That World Wildlife Fund stuff where you adopt an animal and you get the stuffed animal, right? It seems kitschy, but kids really understand. I am helping this tiger, right? I want to be the kind of person who helps the people in my neighborhood and the tigers in the wild. And so you're actually doing the best practice. And that's what I always say to families where the kids or grandkids are young. Don't start with people. Don't start with poverty. Don't start with mental illness. Start with animals and start with your own neighborhood. So well done. Extra points. In terms of giving strategies, there are good ones out there. So most people give out of income. So let's start there and talk about some of those strategies. First of all, we just talked about some of the tax implications for people who are able to think about bunching their donations so they make several years worth of donations in 1 year and thereby maximize their tax benefit. That can be a real winner for people who really are focused on giving enough that the tax benefit really matters to them. Alternatively, giving monthly, right? Someone who wants to make a big gift, but it feels like a big number. So many people are moving to giving monthly, even people who are relatively high income earners, because they want to do more. And that feels like a manageable way to sort of bite that off in little chunks. And don't forget about matches, right? There's some employer matches, but also there are giving circles out there where you can give with other people. There are the option of creating matches within your family or friend circles, right? So giving together, giving collectively, I think is one of those really powerful giving strategies that we don't talk about. But let's talk about a tax strategy real quick because we know we love those. So I want to talk briefly about qualified charitable distributions because this is the one that is taking off. In the number of people who are using QCDs from their individual retirement accounts, their IRAs, has grown astronomically over the last couple of years. And so it's a little bit like magic. You have to be a real grown-up to use this strategy. You're not a real grown-up until you're 70 and a half. So basically, Jamie, you're never going to be a real grown-up. Right? It's going to be a really long time. So if you are a real grown-up, then you can gift up to $111,000 directly out of your IRA to the charity of your choice. Can't stop at your bank account. If it does, there's a taxable event. But if it goes directly from your IRA custodian to the charity of your choice from a federal income tax perspective, it's like it never happened. You don't pay tax. And once you're into RMD at 73 or so, it actually counts against your RMD, which can be really nice for people who don't need the RMD. And the magic is that for most states, it works, not all, but most, it works the same way, right? So it's this incredibly tax advantaged way to give. And we talked a little bit about itemizing versus not itemizing before. 88% of Americans don't itemize. So this is a really powerful giving strategy. Because most people don't give for the tax benefit, I think they forget to have this conversation with their advisors. So the most important giving strategy is to tell your financial advisor what you want to do ahead of time so you can sit down with a planner and plan it out, especially in an environment where the tax implications matter.
I have a great QCD story about the tax part. Was the person was giving, I don't remember the exact dollar amount anymore, but I'll just use 20,000 to make it a nice even number I can do the math on again. But the whole conversation was they're like, well, I don't really need to do that. It's okay. I have enough money. I just give. And then I said, well, what if you think about it like this, that you give the extra amount that you paid tax on that other amount each year? And they go, oh, that is a great way to think about it. So we could increase our giving through QCDs. And we were like, yeah, that's the way to think about it. Now, you know, dollar for them, did it really matter? No, but it did give them permission to increase their charitable giving. And I remember that like that, it just really resonated with them because they weren't trying to find tax efficient ways to give, but they realized that actually we are saving money that's not going to government. We'll just give that to the charity. It allowed them to give more. And it is one of the few ones that didn't move off the RMD age. I feel like every bill, we keep expecting it to leave 70 and a half because all of our RMDs have moved off of it. But it's stuck around there, 70 and a half in an IRA. You can make qualified charitable distributions.
When you're a real grown-up.
Yeah.
When you're a real grown-up. Love the qualifier. So oftentimes people are equating giving with financial resources, but the reality is it can take a lot of different forms: time, attention, expertise, possessions. So how do you think about the relative impact of time, money, expertise?
So I want to start right in the root of your question, where you talked a little bit about, you know, how much. I cannot tell you the number of women, and women do drive giving. Women drive more than 3/4 of the giving in this country. Women have looked at me and said, I'm not Mackenzie Scott. I'm not Melinda French Gates. Well, yes, you are. Yes, you are. Maybe minus some zeros, right? But so what does that look like in terms of thinking about legacy planning, thinking about how to align things with your own values, thinking about how to actually get started on this project? Because the thing that keeps most people from being successful is the getting started. And so I want to highlight a getting started strategy real quick here, because I think it's really important. A list, right? Just a list. So the question that people ask me more often than any other is, can you tell me if I already gave to this charity this year? Right? Typically, I can't tell you. Typically, you could tell you if you would look in your own records, right? So just want to take a second and highlight one strategy that I think is so powerful, and it is the Notes app in your phone where you can keep a list. I was sitting with a philanthropist earlier this week, and she handed over her typewritten pages. She said, these are my gifts from Cash last year. These are my gifts from QCD. She's a good QCD donor. And I said to her, so where did these lists come from? She said, oh, I typed them up. I said, did you save them? She said, no, I'm giving them to you. So I just want to commend to you as a strategy, particularly for women who are busy, who want to make an impact, who are not Mackenzie Scott or Melinda French Gates, but who still are going to make their mark in the world. Open your phone, open the Notes app, make a list of every charitable gift you give this year. When you're making that list, take pity on yourself and write a little note for each gift about where the receipt can be found. Did you take a picture of it in your camera roll? Did it come to your email from some random, payment processor whose name you won't remember, right? If you just do that, you are well on your way to success. So just want to take a second and highlight, that's the root of success. That's where we start when we're doing this.
I think that's a great point. And often what we might find too is if you are not necessarily a financial giver, if you stop and think about all of the places that you actually donate your time, you will be surprised at how much volunteering you do. Much. Especially for women, because we tend to volunteer time more than we do resources. Back to the casserole example.
So much. And so the volunteering thing I think is really interesting. So it's funny because when I'm talking to charities, a lot of times we talk about most people, not everybody, but most people they're dealing with actually have more time, more money than time. Right? So if they give you their time, that's their most precious resource. You could probably ask them for money while you're at it, since they're already giving you something that they may value more than their smaller check. But to go back to the volunteering, right? That's such a key way as a donor to figure out how you want to spend your dollars. And that's something that I always encourage people to do. My favorite conversation to have with donors who are kind of coming along in their journey, they've been giving for a while, is to begin to think about giving strategically. And when we talk about giving strategically, we're really talking about moving towards making fewer gifts, right? Giving to fewer organizations, because most of us give to a lot of them, but making bigger gifts. And to get comfortable doing that, a lot of times you need more experience with the organization. And that is where volunteering really matters. Obviously, when you're volunteering, you're doing all the good stuff, right? You're caring about people, you're spending time in the organization, supporting its mission. Maybe you're learning something. Hopefully you're learning something. Hopefully you are getting those social benefits that make us all live longer, happier, healthier lives, right? So lots of benefit for the donor. But in addition, you're getting to know the leadership. You're able to assess the efficacy of the organization from the inside out. You're getting to know leaders at all levels, not just the CEO. So as a volunteer, you're in a much better position to be a donor because you know exactly what you think about the quality of that organization's leadership. And if you feel that they will do a good job stewarding your dollars. So in conclusion, if you are a donor and you're not volunteering, you're leaving information on the table. Don't do it.
Well, let's pull on that a little bit, because you just talked about how do you figure out if this charity is the right one for you, which is, I think, one of the reasons early on people give to a lot of places, because you care about a lot of things, but you're not really sure who needs the effort. Who do you match with? Is this a good charity? I'm sure you hear that a lot. And that's popped into the news cycle at different points in times, right? On just how effective are some charities on actually managing their end impact versus as they get bigger, more headcount, how do we look at those types of organizations and gauge the impact that they're having? So how do you tell people when they're looking at charities? How do you evaluate them? Are they a good charity for you?
So I love the question because the second most popular question I hear from philanthropists after did I already give here this year is this charity? And then somehow they always use this word, legit.
Yeah, it's legit.
They exist. They're in the IRS's database, so they're legit. What's your real question? Their real question is what you're driving at, Jamie. Their real question is, are they going to be efficient, effective in terms of using my money? Are they really achieving their mission? How do I cut through the noise and understand what all these different charities are doing? And the volunteering is always a piece of it, right? Get in there, get to know people. But I would say first, evaluate leadership, right? Every strong organization has strong leadership. And so the more you know the leaders, and frankly, the more you have an opportunity, and this is great when you're giving in your own community because it's easier, the more you can look at whoever that organization calls its partners and ask them, is this organization an effective partner? What do you think about their leadership, right? You can get a lot of feedback about how strong the leadership is by participating in your community, volunteering, and asking questions.
Mm-hmm.
That's a piece of it. Reviewing reporting, I think, is really key. Almost every organization puts out some kind of an annual report or an impact report. And an interesting thing to look at in those reporting pieces is, what do they measure? How do they define impact, right? If it's just number of people served, and a lot of times it is, how do you feel about that? Is that what you want to do as a philanthropist? Just provide a meal, just provide housing? Those are all perfectly good things to do. But if you have a desire to have a broader or deeper impact, are they measuring that? You may feel they're doing it, but are they able to measure it? And do you care? There's a lot of trust-based philanthropy out there these days where people say, okay, I like what they're doing. I don't necessarily need the depth of reporting because I can see it, myself with my own eyes. That's fine too. I would say, I always encourage people to volunteer with their favorite charities for exactly the reasons that we described. So valuable to have that look from the inside. And I know most people are not accountants and they're not advisors, but they still can read the nonprofit tax return, the Form 990, and they still can read the audit. And most nonprofits keep their audit on their website. If they don't ask for it, if they won't give it to you, think about why that might be and how comfortable you are with that, right? But listen, the juicy stuff in the audit is all in the notes. And so read the notes. You don't have to care about the numbers. And the great thing about the Form 990 is when they revised it about a dozen years ago, they created that first page, a comparative section. And so if I have the 990 from 2024 and the 990 from 2022, I have 4 years worth of comparative data and I can get a sense, is this organization on a growth trend? Are they plateauing? Are they on a trend where they're constricting for some reason? And if you can't explain that trend to yourself, call up the organization and ask them, right? All of those are different ways you can get to know an organization and form an opinion for yourself about how effective you think they are in general, and especially with your dollars. And I would encourage people to indeed form that opinion for themselves rather than looking for like a website to do sort of a quick and dirty job of deciding that for them. Giving's really personal. As Kate said in the beginning, you have to decide for yourself what's the appropriate measure.
Yeah. And one thing I'll bring up on the 990s, right, is that you're almost kind of a full year behind by the time you see them. So that's one challenge out there with them. And then a lot of, I'll say mid-sized to larger nonprofits will have two sides of their charitable organization where they might have a membership side and a charitable donation foundation side. So you might actually have to go find two different ones out there and look at both of them because I do see that a lot where, especially with membership organizations, they will bifurcate the two. And so you'll maybe have to go through two because you might be wondering, I thought this place was a lot bigger and it might be sitting under a different one, but that's one thing to watch out for.
Always true. And I think people feel so intimidated by the idea of having to go and find those things. But I promise you can look up the organization's EIN easily using Google, and you will find those documents very quickly and easily. And we could talk about some tools to do that.
Well, thank you, Elizabeth. You have given us a lot to think about here today. So with that, we are going to dive into some rapid fire questions, if you're okay with it. So if someone only has a short period of time, let's say a half an hour, to think about charitable planning, what should they be thinking about?
Identify their own interests, be radically honest with themselves about what they actually want to support and what kinds of organizations might do that work.
Okay.
What's the biggest mistake that you think high earners make while giving?
Giving cash, please look at your appreciated assets.
Okay. What is one charitable tool that most people have never heard of?
Ooh, the IRS exempt org search function. That's where you go to look up the 990s. If you don't like their database, look at ProPublica or look at Candid. But the IRS one really is the most complete.
How much money do you actually need to make to a charity as a donation to have an impact?
Okay, this is where we say, be Jamie's mom, volunteer. You don't need $1, you need to care.
Okay, so as we wrap up today, we always ask our guests this question. Is there one piece of advice, and let's stick to charitable giving here, that has really stuck with you, or one that you find yourself sharing often?
So Kate, you almost started here. Giving is so intensely personal. Work really hard to find your lane, your interests, and lean into that. And then learn to be strategic over time in that lane you found for yourself.
That's wonderful. And Elizabeth, I love all the work that you do here with all the Bryn Mawr Trust advisor clients and Bryn Mawr Trust clients and helping them figuring out the best way to give, both while they're alive. We didn't even get to end of life giving, which is a whole other area, right? Of how do we live our lives and then leave those legacy moments afterwards. But thank you so much for being on the show today. It was fantastic. And I think, we all had a lot of fun and some laughs too about being a real grown up today.
My pleasure, Jamie. Thanks.
And thank you, everyone else, for listening to this episode of the Planning Perspectives podcast. Make sure you subscribe on your favorite channel so you never miss an episode.
Thank you for listening to the Planning Perspectives podcast. Don't forget to click the follow button to be notified when new episodes are available. Visit our website at www.bmt.com or call us at 833-973-7633. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Investments, not a deposit, not FDIC insured, not insured by any federal government agency, not guaranteed by the bank, may go down in value.